The market today open in a channel, and it may develop a triangle, expanded triangle. Every bar has wick, bounce at moving average. There's no obvious strength in bear or in bull. "60 minutes chart. This uptrend, still in uptrend, and higher highs. If measure the leg 1 with leg 2, this is leg 2. The leg 1 measured move is here. Leg 1. 45. Leg 1, leg 2. Daily chart. Very strong up move. There's no bear bars. A trading range open, or maybe it will develop into a triangle. If this bar closes as a strong bull bar, then it's a high 2 entry. It may go over to touch the trend line. If this bar closes as a strong bull bar and close at its high, it will be a consecutive bull bar entry, but it's close to the triangle line. It may be reversed back to the downside very quickly. And this is the hourly measure move resistance. And trend line just upside. There's the upside move is limited. Wrong number is here. Many resistance. A small trading range and the limit order market, so it's very difficult to find a perfect entry here. Better to wait for a obvious move upside or downside. This is a wedge, you can call it, and 1, 2, 3 wedge. But the downside, I think it's limited. This is a breakout bar. See if this bar can close at its low, or even break out this trend line. It may bounce at the trend line and go back up to this side of the channel. a breakout bar and two consecutive bear bars, but very close at the triangle line and the channel line. Need to see another follow through bar or two high two entry to reverse back this to close the gap. If this bar closes a small bull bar or close at the middle, less the middle of the price, it can enter here because this is a trading range. It can enter at the low of the trading range, lower range of the trading range, and hope the price can go back up to the other side or even higher. A bear trap. But needs to be careful because the upside is very limited, many resistance here. If enter, needs to enter very small. This bull trap could trap the bulls again to downside a high two and go here and go back. Just go sideways in a very small range. Market price continue to push up, but it's still in a trading range. It can reverse quickly. It can be the second leg bull trap. In a trading range, it's very difficult to know what happened next. But it's still in the open. It can go further. But due to the open range open, I don't think it's going to be a big trendy day today. A strong breakout bar. It may lead to a measured move. The round number 5600. See if this bar can close at this high. Or reverse back from the round number. This is a magnet, this 5600. And the gap has been closed. The gap lines here hasn't been closed. It's very close to this gap line. Still in the channel. It can reverse back and break downside. That becomes a bear flag. It hasn't closed at this high. And the price start to reverse. It may be just a test to this wedge line and go back up. Or it can go downside to touch the channel 9. An inside bar. Not very strong. It's a dodgy bar. It can be an entry. See if this bar, the price can go higher to close the gap. The wrong number is resistance. Is resistance. It can reverse and evolve to double top. A double top here. Consecutive bull bars, it can go for a mirror move. It's now always in none. See if this bar can close as a bull bar. A micro double top. One minute chart. It's now a wedge. It can go lower to test the low. See if this bar can break out upside or reverse down. This is a wrong number and important resistance. Trading range open. It may not go higher to touch the moving the mirror move. See if this bar can break out the upside. First, a pullback after always in long. But needs to be very careful. It can develop into a low or high double top at the wrong number. The wrong number is important resistance. It's the second low is a low 2. Now it's going up wedge. See if the bar can break out upside or downside. It's similar as last Friday. Down, up, then range, a trading range. Down, up, down. If this go up, go higher a little bit, close the gap, and reverse back. Market now is at the higher range of the channel. it can reverse back very fast to touch the trend line. A big surprising bar to close as low to touch the lower trend line. Now it's in a trading range, expanded triangle. It's possibly go higher. But this rally is weak, not strong enough. It may go back down and bounce, 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 and go back to the middle. Sideways. Or can go up rally and a channel upside. Now it's in the middle of the trading range. It's not good either buy or sell. It's ranging at wrong number. Breakout bar, a large breakout bar. It could lead to a major move close to the target. The leg 1 equals leg 2 target. See if the price can close as second follow-through bar, bull bar. That would be an entry for the measured move. A large breakout bar after the wedge. It can be an exhaustion bar after this wedge, and then go back down and ranging sideways. Or it could go up a measured move. This is definitely always a long bar, but it's late in the trend. Could be a trap. This is an exhaustion bar. It has returned to the low of this bar. It should break out this moving average and go down a little bit. It will go back to trading range, most likely.